Hi guys, welcome back to my YouTube channel. Before we dive into the video, please kindly do me a favor of hitting the subscribe button because most of you just watch the video and you don't subscribe. Please kindly subscribe so because it encourages me to post more insightful and helpful content here. Now thank you for subscribing. Now let's dive into the video. In today's video, we're not going to waste much time. I just want to tell you how you can actually know the directional bias and key levels in CRT and use it in your favor. Now, the first you want to know is what is directional bias in CRT. Not CRT in the whole forex market. What is directional bias? Now, directional bias means where is the market trying to go? Is the market trying to go up or is the market trying to go down? There's nothing complicated. That's just a simple thing. Is the market going up or is the market going down? That is the market buying or is the market selling? You want to know if the market is going to buy or sell. Now, many traders lose because they are actually buying. Most times they buy when the market is actually falling, obviously, and they sell when the market is actually buying, obviously. But trust me, you don't need to make that mistake again. Here's how to find bias in CRT. Now, before you pick a candle, just know this. When you pick a candle, sorry for this writing. Sorry for this drawing. Sorry. Let me use something clean. Now, when you see a candle like this, when you pick a candle, the first candle. Now, if the next candle that follows close below it like this, then we're going to be looking for a lower price. There's a probability that the next candle that follows is going to be a lower price. Now, if the candle, or if after picking one candle and the next candle closes above it, then definitely we'll be expecting an higher price. That is a bullish movement. Please, everything I'm saying right now, I want you to write it down. You want to jot it down and use it. If price, I'm going to read myself. When you pick a candle, if the next candle closes beneath it like this, there is a probability that the next candle that follows is going to be a lower price too. And if the next candle, after picking the first candle, if the next candle closes above like this, then there is a probability that the next candle is going to be an higher price. That is a bullish movement. Now, when you pick a candle and the candle does something like this, closes inside, you will want to jot this down. If the next candle closes inside like this and wick above, and wick below, it closes inside but wick below, then there's a probability that the next candle is going to be an higher price. Take note, the candle closes inside and wick below, there's a probability that the next candle is going to be an higher price. Vice versa, if the next candle is like this and let's say wick, if price closes inside like this, then there's a probability that the next candle that's going to follow is going to be a lower price. That means you're going to be looking for sell opportunity. These are the things you really need to know if you want to actually know the direction of the market. Now, why do you need directional bias? Why do you need it, and why is it important as a trader? You need to understand directional bias. Now, because when you understand the market, when you know your bias, everything becomes easier. You stop panicking. You know that the market is going to sell, then definitely you'll be looking for sell positions or sell opportunities. Now, you will stop taking random trades. You will start buying when the market is selling, because you already know that definitely the market is going to sell. All you need to do is just to wait patiently, then you sell. You don't need to go into any buy opportunity. You're just going to wait for sell opportunities. And also, when you know your bias, you will find out that your confidence will start growing naturally, because you already know the direction of the market. You don't get panic. You don't worry about, oh, where is this market actually going to? You already know that the market is actually going to buy. You already know that the market is what's going to sell. And that is the importance of knowing your directional bias. That is the importance of bias. Now, when it comes to bias is not just guessing. You don't guess price. You watch price, you read price, and use it. You need to read price the way the market is presenting itself to you. You need to read what the market is already showing you and use it for your advantage, or use it for your analysis or for your setup. Now, the next I want to talk about are key levels. Now, what are key levels? Because you also need key levels. After finding your directional bias, you still need key levels, because even after knowing that the market is going to buy, you can't buy anyhow. You can't just buy at any point. There is something we call what? Key levels. You buy at key levels. Now, you're going to be wondering, what is key levels, or what are key levels? Key levels are just important spots where price reacts or reverses. These are spots that when price gets, they start reacting, or they'll just reverse. And examples of key levels, we have previous day high and low. We have liquidity graphs. We have liquidity. Yeah. We have fair value gap. But the one I want you to focus on, just know your previous day high and low. Just know your fair value gap, your order block, your breaker. You need to study those key levels: fair value gap, order block, breaker. Now, you're going to be wondering, how does bias and key levels work together? And that is the beautiful thing about CRT, and that is the magic of CRT, because bias tells you, are we going down or up? And key levels tells you, will the price react or reverse? You already, when there is a key level, when you know key levels, when you know your key levels, when you can identify your key levels, you actually know that if price gets to this point, there's a probability that price is going to reverse. Now, you're going to be wondering, why am I always saying probability? Because you are not certain of the market. No one is 100% sure of the market. There's a probability. That's always a probability that the market will reverse or react. Now, for example, if your bias is showing an uptrend market, is showing a bullish movement, you can't just buy anyway. You need to wait for a price to go and tap into a key level, a bullish key level, and go its way. Or before price completes its move, you need price to tap into key level. You can't just buy from any spot. If not, you're going to get stopped out. And that is the importance of key levels. The key levels you really need to understand or know, just previous day high and low, or previous candle high and low. You need to know your fair value gap. You need to know your order block, and you need to know your breaker. Not just any fair value gap are valid. If you're following me on Twitter, you're going to see the way I post about those key levels. You can go there and study them today. Not just all fair value gap, order block are valid. There are some ways that price is going to tap into that fair value gap. You're going to know that, oh, this price is definitely respecting this fair value gap, because most of the fair value gap, most times or sometimes, those fair value gap or order block you see are not valid. Now, how can you practice this? We're going to be using the higher time frame now. The first you want to do is to practice with an higher time frame. You start with an higher time frame. For me, I use the 30-minute to the 5-minute, like I said, but you guys just need to focus on higher time frame, like the weekly, the daily, just the weekly to the daily. Then you go to the lower time frame to look for your entries. Now you start with an higher time frame. You mark your highs and you mark your low. You go to the lower time frame, you look for key levels, you watch how price reacts at those key levels. It's going to tell you if this key level right here is valid or not, and you need to wait for confirmation. If you studied my previous video where I explained model 1, I talk about confirmation. You need model 1 as a confirmation there. You can also go watch those videos and understand more. Now I'm going to be using this chart as example. This is Euro USD right now, and this is the weekly time frame. Now, like I said, you just need to pick one candle, and I already told you the logic behind candles. If the candle beside the close below, lower price, close inside, wick below, there's a probability that the market is going to go up. If price close above it, higher price. If price wick above and closes inside, there's a probability that the market is going to be a lower price. Now looking at this weekly time frame Euro USD right here, this is the first candle here. Pick this candle, and we pick this candle right here. Now you pick this candle as your first candle, CRT, candle high, candle low, and I will show you this candle is going to be a CRT high or low. Then the way the candle that follows this first candle reacted showed us that the market was definitely going to buy. If you watch this market, the way the next candle opens and closes will determine how the market is going to go. Now looking at this weekly time frame right here, this is the first candle here, and this candle here, this was candle 1. Candle 2 closed inside, and like I told you before, if candle closed inside and wick below, there's a probability that the next candle is going to be a bullish candle. And you can see the next candle that opened was a bullish candle right here. Now how would you have entered this key level? This third candle here, that is where we have key levels. You would just go to your 4-hour time frame, and look for key levels. For the weekly, you use the 4-hour time frame. For the daily, you use your 1 hour. Now, this is the weekly candle here. Week 1, this candle. Week 2, the candle closed inside, wick below, telling us that there's a probability that the next candle that follows is going to be a bullish candle. Now, before this candle appeared here, this is a live market right now. This candle here closed above this one, and closed above means what? There's a probability that the market is going to buy. Now looking at this candle here, if Euro USD is going to buy, it has to tap into key levels before going up. Key level like order block, key levels like fair value gap. Now looking at this right now, you can see there's a key level right here, there's an auto block right here. And if price is gonna buy, it has to what? React from this auto block here. And price already tapped into it. You can't just start buying now, you still need confirmation. You still go to the more lower time frame to enter into the trade. Now, if the market is definitely going to buy, it won't break this auto block here. It won't break this auto block. It will start rejecting. And if this auto block is valid, then price will not be able to break it. Price is just going to go up like this and get to this point here. Now, if you watch my previous video, I talked about model 1. Model 1 does not actually means it has to be on the second candle. Model 1 is everywhere. You can see model 1 everywhere, not just the second candle. If you go to your 30 minutes, you're going to see model 1 there. Model 1 is something you can see everywhere. Even on the 4-hour time frame just now, after price tap into that order block, if you go lower time frame, if you go into the lower time frame like the 15 minutes, you're going to find out that there's a model 1 there. Those are the key level you need to enter a trade. So the simple way of just knowing the direction of the market, when you pick the candle, if the candle close inside wick below, there's a probability that the market is going to go higher. There is a probability that the market is going to go higher. And if the market is going to go higher, it has to tap into a key level. Now, the key level price is going to tap into at the fair value gap, the order block, breakup. Those are the key levels that price is going to tap and start reacting. So I'm saying all this for you to go to your own chart and study. This is something you have to do by yourself. I can't hold your hand to analyze the market for you. No. I've just talked about how you can pick candles. If you go to the higher time frame, weekly or daily time frame, when you pick a candle, check how the candle closes. If the candle close below, lower price, close wick below and price closes inside, there's a probability that the market is going to go high. Vice versa for the image. So that's just it. All I want you to do is to just go to your chart and study. You need to study. You need to study a lot. You need to study just not once, not twice. You need to study this a lot. Just try this on your chart. If price close below, everything I just said, just use it on your chart. Make sure you study. Make sure you practice. You need to figure out things yourself. You need to study and figure out things yourself. Like I said, you need key levels. I just mentioned the key levels you need. Fair value gap, order block, breaker, highs and low. Those are the key levels you need to look out for. So all I want you to do now is to go to your chart and practice and study. Watch my previous video of how I explained model 1. You can use that too. You can use this too. Just add up everything. And trust me, you're going to grab something. You're going to learn something new. So make sure you just do everything I just said and practice. Figure it out yourself. Check out how price reacts at those key levels I just measured. Check how price reacts at those zones. Jot it down. Take a screenshot. Keep on practicing. And you're going to say that you're going to get used to it. Trust me, all you need to do is to study. Close below, lower price. Close above, higher price. Wick above, close inside, lower price. Wick below, close inside, higher price. And you want to ask me, oh, what about key time? Just study this. You're gonna study this video. You're gonna study. Check your time. Check at what time does this price react at this zone. Figure it out yourself. I want you to figure it out yourself. Just do this. And in my next video, I might want to talk about key levels, but key levels is something, sorry, I would just like to talk about key times, but key time is something you need to figure out yourself. So make sure you click the subscribe button, because I'm going to be dropping more things you really need to know in this. I'm going to be dropping more things, and don't just go without subscribing. Make sure you subscribe and make sure you like. If there's any question you want to ask, make sure you comment it under this video below. Catch up with you guys next time.